The market is bleeding. There's pandemonium and investors are scared, fearful, and freaking out. But you should not. Everything will be okay. Just relax. Let's listen to what Tom Lee had to say. I'm going to break it down for you and explain why this is not a long-term problem. Let's take a listen to Tom Lee.
Stocks selling off today as investors grow more concerned about a slowing economy. The Dow and S&P 500 turning in their worst session of the year so far. And joining us now is Tom Lee from Fundstrat Global Advisors. He's also a CNBC contributor. And Tom, it is great to have you on a day like today where the major averages are not only lower on the day, they're lower on the week. And the Dow, the S&P, and the Nasdaq are now also lower on for the month of February so far. We teased it ahead of this conversation, the fact that you're seeing a contrarian bullish signal here. What is it?
Well, it's a couple things, but I'd say what really stands out to us is that the market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup for stocks.
So you're not concerned about some of the data we've gotten? I mean, that University of Michigan consumer sentiment reading this morning in particular seems to have spooked investors, given the fact that it cited broad declines across age, income, wealth groups. You also said that big spike in year-ahead inflation expectations. That was unchanged, but the 5-year expectations moved higher, too. At what point does that start to manifest into something more meaningful in terms of a slowdown here in growth?
Well, these inflation expectation surveys matter to the Fed because they are concerned about whether or not consumers are actually raising their inflation expectations, and that would, in fact, be bad. But we have to keep in mind the UMich surveys do seem to be polluted by political affiliation. When you break down respondents by Democratic responses, they've gone from seeing inflation under 2% before the election to over 5% today. Republican respondents have gone from 4% to basically zero. In fact, if you look at the distribution of responses for those Democratic respondents, almost 7% think inflation is currently at 25%. So I think that there is a lot of pollution in that data, and I think it's probably pretty typical what happens when there is a change in administration, but I hope the Fed is aware of that political dynamic.
So, Tom, if I recall, in Q4 last year, you were warning about market turbulence, and we've been right now at around S&P 6,000. We're at the level where we were a month ago, a month before that, a month before that in late November. Should we also expect turbulence at these levels at this point, given that the macro narrative and the political landscape is still unclear?
It certainly seems like it. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. You know, we're coming off 2 back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner, which would be positive for stocks.
Okay, so tell me about these granny shots that you've got, you know, part of your investing strategy, some specific stocks, especially since growthy stocks seem to be especially vulnerable on days like today. And if we're going to get more volatility, it sounds like we might get more days like today.
Yeah, that's possible. But investors really want to own stocks that actually have structural advantages. And that's best evidenced by revenue growth, margin expansion, earnings growth, and reasonable prices. So the reason growth stocks will still outperform is that in a period like this, if we have macro uncertainty, they're going to be names with some visibility. it's not pleasant to own a growth stock today, but we know the lesson of 2025 is that these pullbacks have not been deep and investors have been buying these dips. So I don't think today is any different. In fact, it's no different than the DeepSeek panic or the tariff day panic or the CPI panic. So, I think this is going to be a buying opportunity.
So you heard what Tom Lee had to say. I want to break down something very important for you guys when he said political pollution. You have to understand that the 1-year inflation expectation is at its highest since 2023. And the 5-year inflation expectation is the highest it's been since April of 1995. This is very crazy when you think about it, because Democrats had an inflation expectation of 2%. And now after Donald Trump took office, the election, it is now 5%. Whereas Republicans had a 4% inflation expectation, and now it's pretty close to zero. Based on what Tom Lee is saying, there's a lot of political pollution there, and he would take it with a grain of salt because the numbers are likely skewed. And when you think about it, in my opinion, it's market manipulation to put all the blame on Trump. Now, I'm not saying I am a great and huge fan of Trump, but I'm just saying that that's what they're doing. They're putting out very loose data that could be fairly inaccurate or maybe even largely inaccurate because of the fact that the administration has changed hands. And Tom Lee said this is something that's typical and indicative of a administration change. But I don't completely agree with that. I feel like there's a lot more manipulation going on here. We've seen what they've tried to do to Trump before. Now it seems like they're kind of inflating the inflation expectations, which is kind of ironic. In any case, you also have $7 trillion in the sidelines that is trying to come into the stock market. I told you guys in previous videos over the last few months, even before the election, and pretty much for the past 6 to 8 months, that there's a lot of money in money markets in SPACs account. Why would you invest with your millions of dollars when you're getting 5% APY every month or 4%? There's no need to do that. Really, interest rates getting cut is going to force that money into the stock market, because once the percentage continues to drop, there's less and less money and you have to invest. But in order to get a drop in interest rate cut, there has to be a slowing of the economy in certain areas, especially in jobs. So it seems like what's going on is they're inciting fear and turmoil in the inflation expectation numbers, which in turn could indirectly and directly lead to interest rate cuts happening sooner, which means they will be able to get their money into the stock market. Now, it does to some degree seem very fishy and weird to me how all of this stuff keeps happening. But on top of that, you also have investors being spooked with the fact that stocks were at all-time highs. Like Meta was up at 740, Palantir was up around 120, SoundHound had hit like 17, 18, $19, SoFi was at like 18. There was a lot of stocks that were high. Google was pushing $200. There was many stocks that were really just screaming, and it spooked investors along with the inflation data, which I think this is all political. It really is. It is very political. Democrats are going to produce much higher numbers to make it way worse than it is, to put the blame on the Republicans, and Republicans are going to act like it's not a big deal and blame it on the Democrats. So since the Republicans originally thought we had 4%, Democrats thought we had 2%, we actually had 2.9. And now the Democrats think we have 5, the Republicans think we have 0. So we probably have somewhere around 2.5 to 2.7. This is really the same number we've been bouncing around for the last 6 months, give or take a few points. Nothing major though, which means this is really political noise. It's crazy, but that's what's going on right now, and it's a buying opportunity, just like Tom Lee said. Tom Lee yet again explained that small caps are going to lead the way and are going to have lots of growth. However, right now it's a rough time for them. Take a look at SoFi and SoundHound. They're both down quite a bit, more specifically SoundHound, but still going to be the good stocks to own going forward. He explained that this pullback is no different than the DeepSeek panic, the CPI panic, the panic in January, and as well as the China panic in August. And he also also mentioned the tariff panic a few weeks ago. So there was a lot of panic and a lot of major pullbacks since August. We've had like 4 of them, 5 of them actually. And this marks the 6th one, and it's no different. It is a buying opportunity. And this is what I teach my students in Discord and in coaching. Anytime you see lots of red and pullbacks and panic in the market, once it settles down and it starts to go back up and there's a support, it's a buying opportunity. Every time the market is pulled back within 2 to 3 weeks or a month, the market has ran again. And you've probably thought to yourself, man, I missed out on that. And that's just one of the things I teach in my Discord to my students. Look, if you guys are having trouble in the market and maybe you're struggling to understand or make money, maybe just want to retire early and you don't know where to begin, I would love to help you. My dad helps homeless veterans get off the streets. I help him with that, but I also help people just like you achieve their financial goals. You guys can see all the profits my students are making on the screen. If you would like to take control of your financial freedom, I would love to help you. You can sign up at investwithcorey.com. The link is in the information box below. Click on training. You'll be able to watch a video that will answer some of your questions, and then you'll be able to book a call with my team and I so I can help you achieve your goals. But don't take my word for it. Let's take a listen to my students, Josh and Adam, had to say.
In just a short amount of time, the program that you offer, I've learned so much, and I've changed my entire approach to investing. You know, I'm much more structured, much more safe, and I've seen consistent, profitable growth. So I started with $15,000, right? I am now at $40,000. Okay. And I'm so proud.
So I started a little over 6 weeks ago, and I'm happy to report I'm up just shy of 20% on my entire portfolio, equates to $58,000. Just the honesty in his coaching. He's available, he's there, and he has just a very, he's very focused on helping people learn and become successful traders.
So you heard my students, Josh and Adam, had to say, I would love to help you take control of your financial freedom. Look, you don't want to waste too much time. It's better to get on it right now and start growing your account and getting yourself one step closer to retirement. I look forward to seeing you very soon. Guys, look, right now it's all red and it seems very scary. But remember, you have to step back, take a breath, just relax, woosah, breathe. No emotions. As soon as we see stability and things have stabilized nicely, we start buying the dip. You see red, you buy. This is a discount and a buying opportunity, but you have to wait for stability and no more than 10% of your portfolio in any one strategy, sector, or stock. You have to play it very safe, but like I said, it is a buying opportunity. You never buy the top. You always wait for pullbacks and consistent safety and stability on the bottom, which is exactly what we have right now. There's a lot of political noise and a lot of lying and fear-mongering, in my opinion, with inflation data. So I don't really buy it. I think a lot of it is manipulation for the money on the sidelines. I think ultimately, in a few weeks or a month down the road, we're going to look back at this as just another, yet again, fear-mongering moment that you missed out on buying the dip. I look forward to seeing you guys on the next video. Take care of yourselves, fam.